Hey everyone, welcome back to Corporate Decoder, the place where we translate the cryptic language of corporate America. And today we are diving into some seriously dense financial sunshine, or maybe just clouds with a little silver lining from EUPAC Fund. Get ready for a deep dive into how this fund is doing, what is in its wallet, and if it's truly a growth story or just a lot of fancy numbers. And hey, before we get started, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below if you want to chat more about these kinds of filings. So what are we looking at here, folks? This is a certified shareholder report from EUPAC Fund, formerly known as Euro-Pacific Growth Fund. They are basically giving us the semi-annual update for the 6 months that ended the 30th of September 2025. Think of it as a report card for your money, showing you how the fund has been performing and what it is invested in. Let's skip past the official letterhead and get to the juicy stuff. First, some key stats. The fund's net assets are a whopping $136.92 billion. That's a lot of zeros, folks, $136 billion. The total number of things they own in their portfolio, called holdings, is 372. And their portfolio turnover rate, meaning how often they buy and sell stuff inside the fund, is 27%. That's a moderate pace, not too frantic, not too slow. Now, where is all that money going? They break down their investments by sector. Financials make up the biggest chunk at 21.11%. Industrials are next at 18.12%. Information technology follows at 15.25%. Consumer discretionary is 11.17%, and materials are 8.43%. Healthcare is 7.41%. Communication services hold 6.24%, and consumer staples are 5.25%. Energy is 3.02%. Utilities are 1.24%, and real estate is a smaller slice at 0.37%. Interesting mix there, heavy on financials and industrials. Let's zoom in on the actual investments. Under common stocks, the first major holding listed is UniCredit SPA, a financial company worth almost $2.3 billion. Then we see Standard Chartered plc, another financial giant valued at over $1.7 billion. Therese also 3i Group plc and Banco Bilbao Vizcaya Argentaria SA, both in financials. This confirms that financial sector is indeed a big play for them. They invest in a lot of banks and financial services companies. Jumping over to the industrial sector, we see Airbus, the aerospace company valued at nearly $3.5 billion. Rolls-Royce Holdings plc and Safran SE are also significant investments in this sector. It seems they are betting on global industrial and aerospace recovery or growth. In the information technology sector, the biggest name by far at almost $8 billion is Taiwan Semiconductor Manufacturing Company. Limited, this is a massive investment, showing a strong conviction in the semiconductor industry, which is pretty crucial for almost every tech product. We also see SAP and SK Hynix, further solidifying their tech focus. Moving to consumer discretionary, Mercadolabé Inc. stands out, valued at over $1.7 billion. This is a major player in Latin American e-commerce and fintech. Flutter Entertainment plc, a big name in online betting and gaming, is also a significant holding. This suggests they are looking for growth in global consumer trends, especially online services. In the materials sector, First Quantum Minerals Limited is a substantial investment worth over $1.1 billion. Heidelberg Materials AG is also a major holding. This likely reflects their outlook on global infrastructure development and resource demand over the long term. In healthcare, EssilorLuxottica SA, the eyewear giant, is valued at over $2 billion, showing a strong belief in the consistent demand for vision care and luxury eyewear. Novo Nordisk, as an AstraZeneca plc, are also key holdings, reflecting a focus on pharmaceuticals and healthcare innovation. For communication services, SoftBank Group Corp is a huge position valued at nearly $2.2 billion. This company is known for its extensive investments in technology companies worldwide. Tencent Holdings Limited and Nintendo Company Limited are also significant, indicating a strong bet on digital entertainment and communication. In consumer staples, Nestle SA, the global food and beverage giant, is a top holding worth over $1 billion. British American Tobacco plc is also a major investment. This shows a clear play on companies that people buy from regardless of economic ups and downs, a defensive strategy. Looking at energy, Reliance Industries Limited is a massive position valued at over $1.3 billion. This Indian conglomerate has diverse energy interests. Cenovus Energy Inc. and Canadian Natural Resources Limited are also significant. suggesting they see long-term value in the energy sector, perhaps anticipating future demand or price increases. This is where the magic or the math really happens. The total value of all the investment securities they hold is $136,535,398,000. That's a lot of money, and it represents 100.33% of their net assets. The cost to acquire all these securities was $82,471,010,000. This means the fund has gained value since it bought these investments, which is a good sign. Now, this is a bit more complex but important. Investments in affiliates, meaning companies that are somehow connected to or part of the same group of investment companies as EUPAC fund, they have about 4.08% of their assets in these affiliates. For example, Melrose Industries plc, valued at over $538 million, is listed here. They also show Capital Group Central Cash Fund, which is like a short-term investment vehicle they use. This section shows how the fund is managing its own internal investments and relationships. Here is a potentially interesting area. Restricted securities are those that can't be easily bought or sold in public markets. The total value here is $369,865,000. Ivanhoe Mines Limited is a significant holding in this category. This suggests the fund might be taking on a bit more risk for potentially higher returns by investing in less liquid assets. Alright, let's look at the balance sheet. The fund has investment securities worth over $136 billion. They also have cash and other receivables, bringing their total assets to over $137 billion. On the liability side, they have collateral for securities on loan, payables for purchases and repurchases, and various other operating expenses. Their net assets at the 30th of September 2025 are $136,091,654,000. This is essentially the total value of the fund minus its liabilities. This is where it gets personal. They break down the net asset value per S-share for each class of the fund. For Class A shares, the net asset value per S-share is $64.36. Class C shares are at $61.48, and you can see other classes have different net asset values. This is what determines the price of your investment in that specific share class. This statement shows how the fund made and spent money. Investment income, mainly from dividends, was almost $2 billion. After deducting fees and expenses, which totaled over $374 million, their net investment income was over $1.6 billion. They also had net realized gains of nearly $8.7 billion and net unrealized appreciation of almost $14 billion. All this led to a net increase in net assets from operations of over $24 billion. That's a very profitable 6 months. Looking at the changes over time for the 6 months ended the 30th of September 2025, the fund saw a net increase of over $24 billion from its operations. This is a massive gain. For the year ended the 31st of March 2025, the increase was much smaller, about $280 million, and the year before that showed a decrease of over $16 billion. This shows a significant turnaround and strong performance in this recent reporting period. These notes are super important for understanding the details behind the numbers. They explain how the fund is organized, its accounting policies, and how it values its assets. They highlight that the fund operates as a single segment, meaning all its investments are managed as one big pool. They also detail the different share classes, each with its own fees and expenses. This section explains how they value all those investments. For stocks, they use official closing prices. For bonds and other fixed income securities, they rely on prices from third-party vendors who use various inputs. Importantly, some investments, like those in Canva Australia Holdings Pty Limited, are classified as level 3 assets. This means their value is determined using significant unobservable inputs, essentially using models and not direct market prices. This can sometimes mean more uncertainty in the valuation. Now, let's talk about the risks. Investing in this fund isn't without its dangers. They mention market conditions as a big one, meaning economic downturns, political instability, natural disasters, and global events can all impact their investments. Issuer risks are also highlighted, meaning the performance of individual companies can affect the fund. They especially note the risks of investing outside the US and in emerging markets, which can be more volatile and have less transparency. Here is something interesting. The fund lends out its securities to brokers and dealers to earn extra income. As of the 30th of September 2025, they had over $777 million worth of securities on loan. This is a common practice for large funds to generate additional returns, but it does come with some risks if the borrower defaults. They also touch on taxes and how they distribute profits to shareholders. They aim to distribute most of their taxable income and capital gains, which helps them avoid paying income taxes themselves. To raise also a mention of non-US taxes and potential tax reclaims, which can be a complex area. This is a crucial part for understanding where the money goes. Capital Research and Management Company, or CRMC, is the investment advisor. They charge fees for advisory services. They also have agreements for distribution services, transfer agent services, and administrative services. For example, the advisory fees for the 6 months ended the 30th of September 2025 were nearly $275 million. They also detail expenses specific to each share class, which is why you see different costs for Class A versus Class C, for instance. This section is relatively brief, but it confirms that trustees who are not affiliated with CRMC can defer their compensation, and these deferred amounts remain liabilities of the fund. It also states that affiliated officers and trustees do not receive direct compensation from the fund. Finally, we have the approval of the Investment Advisory and Service Agreement with CRMC. The board reviewed the agreement and found that the services provided by CRMC were satisfactory, the investment results were good, the expenses were reasonable and competitive. They also considered ancillary benefits to CRMC, like administrative and transfer agent fees and the financial stability of the advisor. Essentially, they gave CRMC a thumbs up for another year, believing it was in the best interest of the shareholders. So, what is my take on this EUPAC fund report? Financially, this fund has had a stellar 6 months, showing massive gains in net investment income, realized gains, and unrealized appreciation. The fact that their total investment securities are worth significantly more than their cost price is a strong indicator of successful investment strategy. However, the significant holdings in level 3 assets and the reliance on global markets, including emerging ones, introduce a considerable amount of risk. The robust financials suggest they are adept at navigating these risks, at least in the short term. But remember, past performance is not a guarantee of future results. The fund's direction seems focused on global growth, with a strong emphasis on technology and financials. But the reliance on potentially volatile emerging markets and less liquid securities means investors should be prepared for potential fluctuations. They are clearly managing their expenses well, especially given the scale of assets under management, but the different fee structures across share classes are worth noting for potential investors. Overall, this fund is showing strong financial health right now, but the inherent risks in global and emerging market investing are always present. Alright, that is our breakdown of EUPAC Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.